conversation with Tesla, Elon Musk, the board, the IR department. It doesn't really matter. I want to use this episode to share my thoughts on how I think Tesla can improve in the next year from an investor's perspective. So this is not going to be too much about technicalities of 4680 versus this and that, or we should use more language models in AI. I'm not qualified to talk about that. But I think what I can do here is, for my own sake, and hopefully also for Tesla's sake, help the company improve. Because, look, I've said many times on this podcast that volatility is part of the business. Now, I wish I never had to endure this type of test, because right now, this is exactly what we're going through. The volatility is extreme. The selling off of the stock is scary, to be honest. It's at this point, it's existential. It's our savings, our business, our livelihood. Everything's at stake. Needless to say, we're not happy with Elon Musk not being at the helm running the company right now, but that's not even the point. I don't want to dwell on this. Enough has been said about this. I have 3 suggestions to Tesla as a company, how they can improve in 2023. Number 1, launch a podcast on the IR front. So the IR team of Tesla can do better by communicating in a sort of SEC compatible way, of course. Let's say on a weekly basis, podcast, compile questions, just start. I mean, I don't know where this might go, but I feel like it would be a great innovation on the investor relations side. Second, the board needs to change, because I think the Tesla board is still kind of like a startup board, which is fine for a startup. But Tesla's a large company, hopefully going to 100 billion in sales this year. I mean, in 2023, and therefore showing some signs of maturity, and we need people that can pull strings, people that can change direction in Europe, people that can pull strings in Asia, in China, in so on and so forth. So we need to change the board, I think. And third, this is a very practical suggestion I have. As a customer myself, I was trying to buy a Tesla actually recently, and the process was relatively frustrating. Here's why. You go on the app, you do all that stuff. If you just want to buy a car outright, it's a great process. But if you want to use a car loan, and if you want to trade in your car, it becomes hairy. First, the trading is not clear. They give you a range, and then you kind of have to still hope that they give you something. Now, of course, they're going to hopefully guarantee the range, but I think there's a better way to do this. And more importantly is the car loan side. I have a little bit of a problem with my credit, because I'm disputing one payment. And just one payment, it's a couple of $1,000s. I spend hundreds of thousands of dollars per year as a consumer. I have a dispute over a few $1,000s with a vendor that screwed me. And because of that, my credit is in jeopardy now, and they didn't approve the credit. But that's one thing. But the problem is I had to go through the whole process, wait for my car, schedule the delivery, and then I was told, well, your credit is not approved, which is ridiculous. So my suggestion would be, make this a lot more interactive. In a sense, look, what do you want? Here's the steps you need to do to get this deal done. Your credit's not good enough. Here's what you can do to improve it, or here's what we can offer you. Put a $20,000 deposit instead of, so make the loan instead of 60, 40,000, whatever it is, or outsource. Maybe you can do it on the back end where you say, okay, I'm going to take this credit on. Again, I think I'm a dream customer for Tesla, because, I'm relatively wealthy still. That might change with the Tesla stock, but that's a different conversation. What I'm trying to say here is that I am not a subprime, customer or anything like that. So for me, I should be able to buy a car on loan, and Tesla should be able to facilitate that. So those are the suggestions. This is the Not Even Wrong podcast. It's December 27, 2022. This is Krim Delco. For the day, the fund is down 3.1%. The market's down 40 basis points. There was a 3-day weekend because of the Christmas. So for the year, we are now underperforming by 54.5%. About the sell-off in the market. Unfortunately, the market keeps selling off. It's Tesla. The stock is down 11% for the day. The news was that China is being basically curtailed production. Demand is slow. We have some issues there. I think the US, for now, we did some channel checks yesterday. It looks like they're selling everything they can because of the discount, so that's fine. Of course, the question is what's going to happen next quarter and going forward. There is a demand problem with Tesla, there's a growth problem, and there's selling off in the stock indiscriminate at this point. It seems to us that people are, delevering, that the problem here is not some sort of fundamental repricing of the stock. Some of that is definitely going on. This is just this indiscriminate selling. Get out of the stock. Either you have to or you don't want to be exposed. I don't know what the reason is, but there's just no bid in this stock because the news in China is not that bad. And, my son told me today, look, why don't you just sell everything and then rebuy it when the stock recovers? I am still of the opinion that the way this is going to pan out is that we're going to have selling off until a very, very sharp reversal kicks in. I don't think the market will let people sort of tip their toes back in. You're going to have to buy this stock sort of in the 140, 150 range if you don't suffer through this sell-off right now. This is my view. I could be wrong. Who knows where the downside is? Who knows? At this point, anything is possible. The fear. This is scary. This is really scary. And I don't want to dwell too much on fear and all that kind of stuff. The purpose of this particular episode is to give some suggestions, be positive, give some suggestions of what can be done to improve Tesla. And that's what I want to do here. So like I said in the prelude, there's three things I want to suggest here. Number one, on the IR front, start a weekly podcast. Or it could be a blog, but let's do a podcast. This would be innovation. Nobody's doing this. The podcast can be in several ways sort of maybe modeled along the lines of what A16Z is doing. You can, bring in people from different, from manufacturing, from research, from AI, from the humanoid, talk about what's going on. I think it would be an incredibly popular podcast. You can do this in an SEC compliant way. I don't have a problem with that at all, meaning you don't need to talk about the weekly sales or anything like that. Not entertain any questions about any current financial situation, sales, all of that. Just focus on long-term, strategic, interesting topics from different parts of the company. Another example would be Syntago. They're doing the same thing with CRISPR. So interesting examples that we could leverage within Tesla, and it'd be an amazing podcast. Bring in, let's say, an AI researcher, talk about language models, talk about GPT-3 and how that impacts, or ChatGPT, whatever the GPT is currently. Talk about these things. How does that impact Tesla? You can bring in a manufacturing engineer. You can bring in an HR person. Talk about diversity and inclusion. You can talk about the universities and how their recruiting works and why Tesla is recruiting or not recruiting at the current moment and what they're looking for. You can bring in a SpaceX engineer and talk about how do you guys operate with that. There's so many things. Tesla is a number of startups, and there's nothing more interesting than just bringing so. I personally would love to do that. Actually, I would love to work as a podcast editor, podcast host at Tesla. You can do the same, by the way, in China, in Europe. So you can diversify the podcast series with the geographies. You can even do it in the U.S., Texas, California. It has different audiences, different problems. The Cybertruck in Austin, the energy efficiency here in California, the tax situation in California is a lot more questionable. So a lot of things we could do. So this would be my first suggestion. My second suggestion is the board needs to change. And this is nothing, I don't want to be disrespectful to the current board at all. I think they've done a great job. They brought this company from, let's say, 50, 60 billion to 300 billion, where it is today. We had a 5 to 6x. We were much higher, but that's a different conversation. What matters is how do we go forward? I think Tesla is now a large company, $100 billion sales company, hopefully soon. There's a lot of problems to be solved: pricing, strategy, supply chain, political things in Europe, in China, in the US. I think we need more heavyweight type board members. I don't mind paying board members well. I don't have a problem with that, but they need to work for me. I want board members to open up doors in Europe, to open up, lobbying channels in China, in the US. I want heavyweight board members. I want board members with expertise. Somebody like Bob Iger could be on the board, maybe talking about consumer media type stuff. We could have, of course, leading figures in the US, leading figures in China, leading figures in Europe on the board. That would be incredibly helpful. The third, again, just to finish the conversation with the board, I'm not against people being paid a lot on the board. I'm a very sort of Netflix, Reed Hastings proponent here. Pay people a lot and then expect a lot. There's a much better strategy than underpay people and then hope they do better or something like that. So I'm not against paying the board a good amount of money, but then also make them work and bring in people strategically for what they can actually contribute. I think the current board is still sort of a startup-ish type board, and Tesla just isn't a startup anymore. The third suggestion I have is just a very practical solution, the sales process. This is an itch that I'm actually scratching, my own itch. I wanted to buy a Tesla, and the process was a little bit cumbersome. It's much better than a traditional car, but why not put in the order, and then particularly if you want to do it through financing, if you have to rely on third-party banks integrated into the app, don't just send me a message say this loan cannot be approved. Work with me. Tell me, look, this is what you need to do to improve the loan, or these are the reasons why we're not approving it. These are the steps you can do to approve it. So this would be on the loan front. Then the trading front. Incorporate everything. Let's say I put in my VIN, I say I want to trade in my car, give me all in with taxes, this is what it's going to cost you, this is what you're going to have to pay monthly, and this is how you can improve, or like let's say you can improve your credit, lower your APR, or you can put more money down, or you can maybe we have a car in stock that is at $2,000 cheaper. If you take this one, you can save some money. Like, work with me, give me some consumer-friendly interaction that actually allows me to make that transaction happen right on the app. Again, particularly the loan side, when all of a sudden I'm now outsourced to third parties like Wells Fargo. They have their archaic FICO score type stuff, which is ridiculous. I think I explained it in the prelude. I have a couple $1,000 dispute with a vendor that they screwed me. I didn't pay. They put my credit on I'm not using credit much, so I have a relatively weak credit score because I'm also not using. I have a very high credit capacity, but not using credit because it's just not my nature. And that shouldn't be a reason for me not to buy a car. So work with me. Maybe you can build in some solutions like a firm has. Max Levchin used to work with Musk. Maybe we can use some of those ideas, hire people from there, or maybe even cooperate with Max and a firm and that type of sort of data-driven analysis instead of having these stupid FICO scores. Again, work with the customer, make it more appealing to buy the car. Also, already on the app, it's already better than the regular car industry, because again, what you don't want is the kind of stuff where, hey, you want to buy an Audi, well, send us an email and somebody will get back to you. That is unacceptable. I want a firm quote right now. Use technology to make it happen. I think this is an itch that I want to scratch myself, and I'd be happy to work on this solution for Tesla. This particular episode is a little bit also a job interview for me. I would be happy to work out a solution to work for Tesla in some sort of capacity, either on the IR side to, like I said, organize the podcast. I would be happy to help reorganize the board, or I would be happy to work on a more streamlined sales process and streamlining also the credit situation more into a interactive Web 2 or even Web 3 type app situation. I mean, Web 3 is a whole other conversation where we could incorporate that into the process, but use some of the credit. Use some of the credit. Use some of the credit metrics, and maybe a peer network that decides who is creditworthy and who isn't. Those are there's things you can do. I mean, I'm just thinking out loud here, but I think the archaic credit process right now with FICO and stuff really has to go away. Tesla is in the position, like they're doing with insurance, to reprice the market and reinvent the market and create even more attachment to the customer. I think fundamentally, the company that will win in this market of luxury electric autonomous cars is the company that has the most appealing product. And the product is not just the car. The product is a lot more than the car. The product is all the ancillary services around it. And Apple has done a great job, and I think Tesla can do a much, much better job than they're doing today and create much better customer experience. So to summarize, This is an attempt to help Tesla improve the business on three fronts: IR, the board, and the sales process. Three practical suggestions I have. Just as a sort of reminder, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. When you're exposed to this type of volatility that they're exposed to right now, the best way forward is to be constructive, to create content, to help think through the problems, see the positive sides of things, tackle the negative sides. And this is an attempt, this is an open interview that I'm having with Tesla, a virtual interview, of course, where I'm suggesting ideas that I'd be happy to work on, actually. And the three ideas, again, one, I improve the IR process by doing a weekly podcast that could have several forms. I think A16Z is a good role model here, where you bring in experts from different areas of Tesla, you talk about it, and then you entertain questions. They can be SEC compliant, of course. There's no forward-looking statements and stuff like that. It can be all about the technology and about the business and those sort of things, but not in a sort of, oh, well, our sales this week were such and such, none of that stuff. Second, the board needs to change. We need a more effective board, a highly paid board, but it needs to work for us more effectively. We're now a global company. We have, a global company type problems. We need to open doors, lobbying, political stuff, tax stuff, all these kinds of big picture things. And then we also have technology problems. We need maybe one or two experts on the technology front, maybe a physics person, maybe somebody from SpaceX, those types of things on the board. Versus the board right now is a little bit too much of a startup-y board. And I think that needs to change. Third, what I'm suggesting is a streamlining of the sales process, particularly when it comes to loan and financing, which is a big part of buying a car. I mean, Musk said it. If you buy a car on loan, particularly with high interest rates, you're looking at a problem. Right now, we have probably a recession. We'll have lots of loan defaults and all that kind of stuff. So instead of just whining about the problem, how about we help fix the problem by streamlining the process, insourcing the loan application process either onto the Tesla platform or have better cooperation with third parties like Wells Fargo and financing companies like that, where we don't just don't approve a loan because of a FICO score. We work with the customer, we look at their behavior, we look at data, we try to use technology a little bit like a firm at least initially tried to do. I remember when Max Levchin started the company, he spoke about this, where you use behavior, you use actual behavior of people to assess their credit score and their credit worthiness. I would take a bet, this is just me thinking out loud, that you could analyze the driving behavior of somebody and infer what kind of credit they are. So I am a good example here. That I'm scratching my own itch here. I've been a Tesla customer for 3 years. I've never missed one loan payment on my current Tesla car. But I did have a dispute with another third-party company that had a completely unrelated to Tesla. It's a couple $1,000s, which is less than 1% of what I'm spending a year as a consumer. And I'm having issues now with this credit, which is completely ridiculous. And the problem is when you try to buy the car in the app, you get a message you're not being approved. So this could be a lot better. Here are the steps you can do to improve. Here are the steps we require you to do to approve the credit. We can't approve it this way, but there are different channels. We're going to do this, and that. You can maybe, if there's really a problem with somebody's credit, you can then maybe take some of the risk off the table and give it to the finance companies and keep the high risk and sell it off to high risk, high yield type investors. There's stuff on the back end in securitization and things like that you can do. I just think that the consumer relationship starts with the app buying the car, and I think that can be a lot improved. Thank you.